Hey everyone, Eric here from Divinvesta. Today, we're talking about a powerful strategy that can transform your financial future, growth, and dividend investing. Whether you're new to investing or looking to optimize your approach, we'll cover the benefits of dividend investing, the snowball effect, the magic of compounding, and how consistent investing over time can create amazing wealth. We'll also tackle some common myths about investing, share insights from Warren Buffett, and I'll tell you about my own financial awakening. Let's dive in. For me, the pandemic was a wake-up call, my financial awakening. The madness forced me to rethink my financial situation and how quickly the world can turn upside down. I challenged myself to learn the stock market and investing in stocks. I focused on key people like Warren Buffett and Bill Gates to understand their success. It's not a get-rich-quick scheme. You need set goals and a solid plan. The key is building long-term wealth by investing in solid companies. I used to think investing 6% in my 401k and saving was enough. But I realized I was wrong. Building lasting wealth for your family requires more. Here's an interesting fact. The median retirement savings in the US for ages 55 to 64 is $185,000. For ages 65 to 74, it's $200,000. If you live to age 85, what can you do with that money? Inflation rose 8.5% in 2022, 4.5% in 2023, and 3.5% in 2024. Over 3 years, inflation rose by 15%. If you had $100,000 in a bank account, its purchasing power would have dropped to $85,000. Inflation is one of the biggest wealth killers. I remember buying a Big Mac meal in the 1990s for $2.35. Now it's over $10. There are ways to protect against inflation, some better than others, that prevent the erosion of your money. Investing in funds like ETFs, which offer inflation protection, is a good option to preserve the value of your cash. When you invest in an index fund or ETF, you're buying small portions of big stable companies. These funds handle the hard work of managing investments, and you get to enjoy the long-term benefits. It's simple, powerful, and doesn't require you to spend all day researching individual stocks. Dividend investing is about owning stocks or ETFs that pay dividends, regular payouts from a company's profits, unlike traditional growth investing, where you rely on stock prices to increase. Dividend investing provides a steady income stream while your investments grow. When you reinvest those dividends, your money compounds over time, leading to exponential growth. If you're not spending all day researching companies, their stocks, intrinsic value, and market conditions, ETFs and index funds are your best friends. Warren Buffett said it best. When you buy a stock, you're becoming a shareholder, an owner of that company. This shifted my perspective. He's worth $141 billion today, and that's a man I trust to share sound advice. He recommends investing in low-cost ETFs or index funds like the S&P 500. You don't need to be a Warren Buffett to succeed in the stock market. A light bulb went off in my head. Buying ETFs or index funds with low fees is a set-it-and-forget-it approach to investing. Your money is spread across a diverse range of large, stable companies, often worth between $10 billion and $3 trillion. Here's why this approach works. Diversification, ETFs, and index funds minimize risk by spreading your money across many companies. Simplicity. You don't need to be a stock picking expert. Long-term growth. These funds grow steadily over time making them one of the safest ways to invest. When you invest for the long term, it's essential to tune out the noise. Warren Buffett was once asked, "Aren't you worried about world wars, oil crises, disasters, inflation, recessions, and other challenges?" His response stuck with me. There will always be bad news about wars, disasters, and economic challenges, fearmongers claiming the market will crash, daily fluctuations making it seem like the sky is falling. I remember getting hooked on bad news during the pandemic. People were saying, "This is the end of the world as we know it," or "Another pandemic is coming," or "World War III will break out." Here's the truth. Markets have survived and thrived through wars, recessions, pandemics, and countless crises. Focus on your long-term plan. Block out the noise and let time and compounding do the heavy lifting. Dividend investing gets exciting with the snowball effect. By reinvesting your dividends, you create a cycle where your earnings generate even more earnings. Over time, this compounding effect accelerates your wealth creation. The longer you let it work, the more significant the results. This is why compounding is often called the eighth wonder of the world. Here are practical examples showing how consistent investing, even in small amounts, can lead to incredible wealth over time. Investing $400 a month for 30 years at 8% estimated return, your ending balance would be $597,237. Investing $800 a month for 30 years will give you ending balance of $1,193,381. Investing $800 a month for 40 years will give you ending balance of $2,795,233. As you can see, time is your friend to building wealth. These examples highlight how compounding amplifies your returns over time, even with modest investments. Let's address some common myths that often stop people from investing. Myth number 1, investing is only for the rich. You can start with as little as $10. The key is consistency, not how much money you begin with. Investing is like gambling. Investing is based on strategy and research, not chance. You're buying into real businesses that generate profits over time. Myth number 2, you'll lose all your money. Diversification, especially through ETFs and index funds, minimizes risk. Myth number 3, the stock market isn't stable. While volatile short term, it has a proven track record of growth over decades. Myth number 4, I need to be an expert to invest. Low-cost ETFs and index funds make investing accessible to everyone. Dividend investing through solid ETFs or index funds is one of the safest and most effective ways to build wealth over the long term. Whether you start with $100 a month, $100 a week, or $200 a week, the key is consistency and patience. Block the noise, focus on your plan, and let time work its magic. Start today, and your future self will thank you. If you found this video helpful, don't forget to like, subscribe, and share it with someone who needs to hear this. Let me know your thoughts or questions in the comments below, and I'll see you in the next video right here on Divinvesta.